With Bitcoin's value fluctuating, crypto market players are scratching their heads over what's really behind these market mood swings. Among the recent factors influencing the market are statements from U.S. Federal Reserve Chair Jerome Powell, which have acted like a long-awaited rain on the parched crypto market, eager for fresh investment inflows. Also, with tensions running high, Pavel Durov's latest legal troubles have got the whole tech and crypto community holding its collective breath. The story so far is just the beginning. We'll explore the most pivotal moments and what they might mean for the industry's future. Crypto newcomers, Bitcoin mining trends, and groundbreaking developments in digital asset wealth are also featured in this report. Let's go market. The recent ups and downs in Bitcoin's value have left many in the crypto world puzzled. One key driver behind these shifts is U.S. Federal Reserve Chair Jerome Powell's statements, which have sent ripples through the market. When Powell commented that inflation is on a sustainable path back to 2%, Bitcoin saw a notable surge, pushing its price above $62,000. The optimism, however, was tempered by a market now fixated on the upcoming Federal Reserve meeting on September 18th. With speculation rife about a potential rate cut, the market is bracing for significant developments. According to the CME FedWatch tool, there's a 67.5% chance of a 0.25% rate cut and a 32.5% chance of a more substantial 0.5% reduction. These expectations are centered around the current target rate of 525 to 550 basis points, and any easing in monetary policy could drive further investment into Bitcoin and other riskier assets. Powell's remarks not only influenced Bitcoin's price, but also sparked a massive inflow of $533 million into digital asset investment products, marking the largest weekly gain in over 5 weeks. Analysts from CoinShares linked this influx directly to Powell's speech, underlining the strong connection between Federal Reserve actions and crypto market dynamics. Notably, Bitcoin was the main beneficiary, receiving $543 million, which even exceeded the total market inflows due to minor outflows in other assets. The bulk of these Bitcoin inflows occurred on Friday, immediately after Powell's comments, indicating a direct market response. Regionally, the United States led with $498 million in inflows, reflecting a strong local interest in digital assets tied to U.S. monetary policy. However, regions like Hong Kong and Switzerland also saw positive inflows, while Germany experienced minor outflows totaling $9 million, highlighting regional differences in response to the market. While some are optimistic about rate cuts, not everyone is convinced they are the answer. Former BitMEX CEO Arthur Hayes has criticized the current U.S. government's approach, suggesting it may be more politically motivated than economically sound. Hayes argues that instead of cutting rates, the Fed should consider raising them to maintain stability, especially given the U.S.'s dependence on Japan, its largest holder of U.S. government bonds. He warns that narrowing the interest rate gap between the yen and other currencies could lead to a rapid yen carry trade unwind, potentially causing market volatility. Hayes points out that since 2020, the U.S. Consumer Price Index has risen by 22%, and the Fed's balance sheet has grown by over $3 trillion, suggesting the Fed's actions may be more politically driven than economically justified. This potential instability could have far-reaching consequences for global markets if not carefully managed. Despite the initial surge following Powell's speech, Bitcoin's price action has remained relatively contained. On August 24th, Bitcoin briefly crossed the $64,000 mark, but failed to sustain this level, pulling back soon after. Nvidia's earnings report further dampened the mood, triggering a sell the news reaction in the crypto markets, causing Bitcoin to slip back to $59,000. Analysts from QCP Capital predict that Bitcoin will likely remain within a tight trading range of $62,000 to $67,000 in the short term, given the prevailing market uncertainty. While there is optimism about the potential for a rate-cutting cycle to boost the market, this has not yet translated into a significant increase in implied volatility. QCP Capital believes that any dip in equities and crypto will be short-lived, as increased liquidity from anticipated rate cuts is expected to eventually push risk assets higher. While some market participants remain optimistic about a near-term recovery, others are more cautious. Blockchain analytics firm Glassnode reports that net capital inflows into Bitcoin have slowed significantly, with only 11% of days experiencing smaller inflows, excluding bear market periods. The MVRV ratio, which measures average unrealized profit, has reset to its long-term average of 1.72, a critical level that has historically marked a shift between bull and bear markets. Similarly, the percentage percentage of supply and profit has returned to its mean value, aligning with conditions seen during major corrections in 2016, 19, and mid-2021. Additionally, the perpetual swap markets, which reflect speculative interest and leverage in Bitcoin, have seen a marked decline in liquidation volumes, indicating a reduction in speculative activity. Despite this, history suggests that such periods of equilibrium often precede substantial volatility spikes as the market adjusts to new conditions. Traders should brace for potential turbulence ahead, presenting both risk and opportunities depending on their strategies. In a dramatic turn of events, French authorities arrested Pavel Durov, the founder of Telegram, at Paris' Le Bourget airport. Durov was accused of facilitating criminal activities through Telegram due to the platform's lack of strict moderation and its reluctance to cooperate with law enforcement agencies. After being released under judicial supervision, Durov was required to report to the police twice a week and barred from leaving the country. This arrest has ignited intense debate within the tech and crypto communities, with high-profile figures like Elon Musk, Vitalik Buterin, voicing their concerns. Musk criticized what he sees as excessive government intervention, while Vitalik Buterin warned that this could have worrying implications for software and communication freedom in Europe. The taunt community has rallied around Durov, emphasizing the importance of staying united and committed to the principles of freedom of speech and decentralization. Despite recent economic shifts, the US Bitcoin mining market remains robust. A recent report from JP Morgan estimates the market at $74 billion, reflecting significant growth. The 4-year block reward revenue opportunity is estimated at $37 billion, which, although down 19% since early June, is still 85% higher year on year. The stability of the mining sector is also evident in the relatively stable Bitcoin hash price index, which measures the revenue earned by miners per petahash per day in USD. Despite minor fluctuations, the index has generally remained stable, suggesting that the mining community is weathering the market conditions well. This resilience is a positive sign for the broader Bitcoin ecosystem, indicating that despite challenges, the mining sector remains a strong and vital part of the market. So that's all we have for this one. Make sure to subscribe and also like this video for more content just like this.